Markets reporter at NASDAQ, and joining me is Greg Womack of Womack Investment Advisors, all the way from Oklahoma. Thanks for being back with me at MarketSite. You know what, since the last time we spoke, the bull market seems to continue to rage, or at least not sell off.
That's right. Well, thank you, Jill. It's great to be here, and especially back in New York City, and it's a treat. So, yeah, the bull market continues to roll. We're seeing strength, you know, in the big picture of the market. Shorter term, there's been some weakness, but a lot of that's with geopolitical news and, you know, the debt ceiling, those type of things. But overall, the market's still strong. We're seeing the price valuations getting a little loftier. The Case-Shiller price P ratio is up right at around 30, 29 to 30 range, and still high when you look at historical mean, but still way off the highs of the year 2000 tech bubble of 44 some PE on the Case-Shiller.
Right.
So,
but it really is surprising how resilient this market has been, right? Like you had mentioned before, North Korea, debt ceiling, and we have a couple of catastrophic events happening at home right now, and the market, just every tiny dip, every five-handle drop in the S&P is being bought.
yeah, amazing. The volatility index has been fairly low. I mean, it's hit like historical lows, I guess, here recently. Volatility's picked up some, but overall the volatility's low. We're seeing not a huge drop in the market. You know, at some point it'd be nice to have a good correction to kind of bring valuations a little bit lower and then a sustained rally perhaps. But I think the environment, because of interest rates very low, and there's not really a lot of places to go for money, you know, to make money, and as far as yield, because you got the S&P yield, average yield is much higher than, you know, the 10-year Treasury right now. So and then you have on top of that, earnings are fairly still strong.
They have been quite good.
Right. And so I think if earnings continue to grow, interest rates stay fairly low, I think you could see the market continue at least another surge up. But I do feel like we're getting closer to the late stages of a bull market. Mm-hmm. So it's going to require people to be a little more picky and perhaps even more protective, you know, of their profits.
Right. Well, you know, it's another sleeper market, emerging markets. They're actually outperforming our performance, and we've done quite well this year, and we haven't heard much conversation about that. I realize the U.S. news cycle has been so intense over the past year, but they've quietly been performing quite well.
They have. That's a good point, Jill. I mean, China for the last several years underperformed, but now their stocks are much cheaper valuations, more affordable stocks than the U.S., and they're outperforming. And you're seeing substantial companies like Baidu and Tencent Holdings and Alibaba, who, you know, these companies are probably going to be some of the largest companies in the world in the next few years, even surpassing perhaps Amazon. Some people, analysts think that Alibaba's growth will surpass Amazon's at some point. That's amazing.
Right.
Or Amazon.
Amazon.
So it's that growth, and what you have is the consumers there. There's such a huge consumer market in these Asian countries and also South America, that these countries are growing at much faster paces than the more developed countries like Europe and the U.S.
Right. Well, okay, so to wrap up, what are you advising clients to do if you think we potentially have some more fuel, right, in this bull market rally, but you also think that we're going to see a little bit of a correction? What do you tell clients to do? Because they've made a lot of money being in equities.
So what you want to do is, in my opinion, you want to be protective of your profits. So using trailing stops, which are prices if the stock hits, it'll sell. But if they're trailing, is the stock continues to move higher, that trail stop price limit that you put in goes up with it and follows it. So that's one thing you want to do, is take profits perhaps sooner, and then also be open to alternative areas. There are a lot of areas in this market, Jill, that one reason I think it still has much more upside is some of the market hasn't participated.
Like where, for example?
Well, for example, biotech, which is now starting to heat up, has not participated in the last year or two in this market. Also, you have pharmaceuticals, which are much cheaper valuations. They've declined for a number of years. Now we're starting to put in bottoms and move higher. Look at gold and precious metals, outperforming the markets now year to date, the S&P. So, and they're coming off 5-6 year lows and starting to turn. So there's a lot of opportunities there. So when you look at the broad market, you look at the the capitalization of the top companies in the market, those have really outperformed. Their valuation P levels are much higher. But then you have a group of stocks, maybe it's energy, commodities, pharmaceuticals, things of that nature. Price valuations are very low compared to the general market and are starting to turn back around. So that's why I think we still may have another upside
Just
in
that
this
rotation
market.
into those names because they're still attractive. All right. Well, thank you very much for joining us,
Jill.
as always, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.